today with Wendy Skemmer from Benetrends, my kind of go-to person. Thanks for Wendy for joining us again.
My pleasure. Thank you, Lisa.
So we just had someone that decided to pull the trigger and buy a business. And Wendy, you helped them because they kind of wanted to do both. They didn't want to use all of their retirement, which I think hopefully we've gotten through to people. You don't have to use all of your 401k. You can roll portions. But in this case, he used some of his 401k, but then he ended up using that for a bigger down payment really than he needed for his SBA loan. So his debt was a little bit less. And again, I always tell people you need to work with someone smarter than me when it comes to this stuff. I know that you have lots of options, but I don't want to have to keep my thumb on the pulse of all the different changes and regulations and that type of thing. But maybe just explain to everybody that option, the option of a little 401k, a little SBA, rent a little equipment, like all the different things that you can do to help them.
You got it. And thank you so much. And yes, just like your previous client did, you can utilize the rollover program where you're using retirement funds without tax or penalty for your business purchase in conjunction with an SBA loan and with other funding options as well. But let's focus on this last client story. They wanted to get an SBA loan for about $500,000, or I should say they wanted a project cost of about $500,000. Now, they did have enough money in retirement, but, you know, as a couple, they didn't want to invest all of that in one basket, which we've always learned that, right? Diversify your investments. So I understood that. But yet on the flip side, they didn't only want to put 20% down. They wanted to put some more money down. However, I want to highlight, if you wanted to use the ROBs just for your 20% down, it could very well make sense because now you're still freeing up your cash for that liquidity requirement that those lenders are looking at. But here's how what your client did. They rolled over $250,000. They felt totally comfortable. We did the ROBS program, set up the C Corp, designed the plan. They rolled in their money. They bought the stock in their company. They showed the lender, look, I have $250,000 I'm putting towards. So basically 50%. Of course, the lender's happy. Another thing they did was, because they were able to keep their loan below $350,000, they also took the pressure off having to declare personal collateral. So when you go below 350 in loan size, an SBA lender does not have to ask for personal collateral. Now, that doesn't mean they definitely won't. So I don't want to paint a perfect picture, but it does give you leverage. And especially with the lenders we're working with, that if I have somebody who says, I'm in a homestead state like Texas, or I really don't want to collateralize my house because, but whatever reason. Okay, well, here's a strategy to help you do that. So they got a loan for $250, rolled over $250. Bank's happy. And what was nice is we knew we could guarantee their funding because of the strength of what they had. They weren't touching their liquidity. They weren't touching anything that affected their credit. So they were able to do the rollover, pay their franchise fee, start their training as they're finishing their SBA loan. Traditionally, a lot of folks would say, oh, don't do that until you're guaranteed from the bank. But if you have a company that set you up, that we can pretty much guarantee you that you're going to get funded, it's really nice. I mean, your client, there was a lot of competition for that territory. So we sped things up for them and really helped them. When you're looking at an SBA loan, just to give you an idea of what that world looks like today, minimally on a startup franchise, plan to have to put down 20% of that total project cost. I am a fan if it makes sense. And it could be different variables, the size of the project, your liquidity position. Leave your cash alone. Do the rollover if you can, right? Not everybody can, but if you can. And then your SBA loan, again, minimally 80% loan to value. You'll have a 10-year term loan, most likely. Okay. As long as your franchise agreement's 10 years, it's kind of a good barometer. And I know everybody wants to know, what are the interest rates? Okay, prime is at 7.75 today. Now that's going to change. This is a recorded webinar. By the time
I was going to say, don't talk about interest rates. It's all going to change.
all going to change. You know, a week from now, it could end up being at 8.25.
Right, right.
Keep in mind, SBA right now, if you're not buying real estate, you're in a variable rate. So today it's 7.75. 5 years from now, hopefully it's coming back down. But my point that I want to make about an SBA loan, 2 to 3 points over wherever prime is, barometer figuring out where you'll land.
Right.
And it could be the difference of not necessarily a higher credit score. It's a combination of everything, Lisa. It could be the type of business they're buying. It could be where they're buying the business, right? So, you know, to think that when you're looking at SBA, you're looking at interest rates 2 to 3 points over prime, wherever prime lands, is a good barometer. If you're wondering like what your bank is going to ask of your clients, they want to see liquidity, liquidity, liquidity. So when they see that you didn't have to touch your cash and did a rollover, that's great. If you have, like I had a client earlier, they just sold a rental property. So they had a good amount of liquidity. They didn't have retirement funds. So it worked out nice. We can use some of that, get them a loan. But to your point earlier about the most recent client we were talking about, a lot of folks don't realize that they can use their retirement funds in this way to help them on that journey. And I've had calls where they say, oh, I'm trying to get my cash reserves where they need to be. Most of my money sitting in my old 401k. It's magic to be able to tell them now.
Right.
And one thing I want to mention, a lot of folks are finding themselves laid off. I mean, I've had 3 calls in the past 2 days from big companies, Google, Amazon, AT&T, you know, all finding themselves middle management, mid-50s, early 60s, bunch of their wealth just sitting in that retirement plan. And I've had conversation over and over again where folks are like, I was just going to pull it out. I'm 59 and a half. I don't want to pay the penalty. Why pay the tax? And you just left your big corporate job making $450,000 a year. You're going to pay so much money in taxes. So it's a great way for that person to utilize some of their retirement. And of course, if they don't want to use all of it, they certainly don't have to. You can use some of it to achieve the goal of getting that SBA loan. Also want to mention, to your point, depending on what your client's buying, maybe the equipment leasing is an answer. We have a great equipment leasing program, no money down, lease till you own, fixed interest rate, and lower than what you'll find with SBA. So I had somebody buying like a person in a van type of franchise. And bought a fleet of vans with the lease equipment, and then rolled over about $150,000 from their rollover IRA for their working capital. Done. So you can use these strategies that we talk about a lot on these conversations together. You don't have to be one or the other.
Right. And that's kind of what we need to get across. I think people kind of think it has to be, you know, SBA or the highway, 401k rollover or nothing, you know, ask my mom for money. So I think it's good to know that you're going to help them. And I mean, the best way, right, Wendy, is early on in the process, just have a conversation, lay your cards on the table. You're not going to do a hard pull of credit. You're not going to start asking for crazy, you know, personal type of security information. You're just trying to help them figure out the options, right? So
exactly right. We do a pre-qualification, no cost, no obligation, no hit to your credit. I tell folks, you know, you really want to protect all those things while you're going through the process. You don't want everybody running an inquiry on your credit. We're very respectful of that. And I want to mention something that's been coming up a lot lately, partners. Just thought it's worth mentioning. Can you have partners on an SBA loan? Absolutely. If you have somebody that you don't want to the SBA loan, but they want to invest money, as long as they're less than 20% owner, they don't have to be on the loan. But let's talk about the rollover just real quick with partners also. I have a deal, I'm closing 5 partners, rolling in $25,000 each. And then getting a loan collectively, but taking so much pressure off. And why not? They have the money sitting there, right? And no one's making 20, 30% on their 401ks like we were a couple of years ago. You know you're going to make a lot more money on this business opportunity. So partnerships, this works beautifully. Family members, husband and wife, both rolling over money together, you know, and alleviating debt right now, I think is really smart. Doesn't mean you can't get an SBA loan, but maybe you don't need a $300,000 SBA loan. Maybe if you go to 150 and under, not have to worry about collateral and really reduce your fees and your debt that you're paying every month.
All right. Thank you so much. You're always a wealth of knowledge. I appreciate you.
Thank you. I appreciate you. Right back.